So for me, if you ask me the question, like, how do you diagnose it? How do you know if it's your risk or your system or both? And I think you're probably not going to be able to know that if you don't have the data, right? So I think that's step one is you need to have the journal and you need to have the data. And we've beat that to death in previous episodes, so I'm not going to even go into that here. Because it's hard to be honest with yourself as a trader. I think a lot of people deep down know that it's one or the other or both. But I think signs that risk is a problem. So if your calls are right, but you keep blowing up, you're probably oversizing. So if you're right, if your calls are right, but you're blowing up, you're probably oversizing. You're risking more. So you might actually, like, Nick, can you have a high win rate and still be a loser?
Yeah. Your risk to reward is not right. You're losing 300 every time you make 100.
So that's, I think, one sign that risk is a problem. I think another one is if your journals show that you got the trade right, but you got stopped early or late. I think that's another sign that your risk is not proper. So, for example, if you're 50 times longing off of a level, but a little wiggle takes you out and then the trade goes, your risk is not proper. Risk isn't the issue because you knew the area, you had the trade right, but risk took you out. And I think, another one, like we kind of just mentioned, like if your win rate isn't terrible, like maybe it's 40 or 50%, but drawdowns are huge. If you're risking 5%, 10% of your account on a single trade, risk is an issue. Maybe it's the system too, but this points to risk. And I think obviously, I've been a victim of this. If one bad trade wipes you out, if one bad trade kills a good week, risk is an issue. If you're consistently profitable per trade, but your account equity goes backwards, risk is an issue. And I think these are, look, we know people and we've seen people over the years, right? I mean, we've been doing this for 4 or 5 years. I lost track of how long we've been doing this, where we, as a community, as a community, right? Yeah. And we've seen people filter in, filter out. We've seen people blow up. We've seen people succeed, right? And we've seen, equity going backwards. We've seen bad trades wiping out a week or a month. We've seen good win rates, but terrible drawdowns from a single trade. We've seen people who call it, who get the TA, but just can't get their risk proper. So how about signs that system is a problem, right? So your edge, your system, how you trade, how you look at the market. Well, I think this is easier to figure out than risk. And we talked about this. Brian, Dunk both talked about this. If you're losing 70 to 80% of your trades, despite disciplined risk, then guess what? It's a sign that your system is the problem. If you're journaling and there's no statistical edge, then your system is the problem. If the risk to reward doesn't work out, then your system is the problem. If you're back testing and your forward testing shows break even or negative expectancy, your system is the problem. If you feel right but data shows otherwise, your system is the problem. If you have no repeatable setup, if it's just random, then your system is the problem. Now, I think most traders fall into both. I mean, what do you think, Dunk? I want to say early on, right? Let's face it. The statistics are there. Most people fail. And I think most people fail because either one or two or both are broken. And I think from what I've seen, dude, based off of just years and years of experience, a lot of times it's both.
Yeah, I think, at the end of the day, it's that little bit of wiggle room that they think they hit a key level and it just comes down and gets them one more time and then runs the other way.